Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Thursday, June the 2nd, 2016, and I have the very distinct honor and great pleasure of having back on the show once again Mr. Louis Cammarosano from smallgold.com. How you doing today, Louis?
Rory, I'm doing grand. How are you doing?
I'm doing all right. Well, we're going to cover silver and gold, and we're going to take a look at quite a few different things from different angles. So we got a lot to cover, and you ready to take off?
Let's get at it, Rory.
Here we go. I want to remind you that Dave Kranzler and I on the Shadow of Truth interviewed Jeff Brown about 6 months ago. It was a two-part interview. And that interview was very specific to silver, to China, and to solar production. Mm-hmm. And Jeff Brown, who lives in Beijing, he's an expat, grew up in Oklahoma, he's lived now in China on two different occasions, and his most recent, brings him to today, he's been there for 6 years now, 7 years, and his whole premise of being there is to study China and to study the markets. That's his whole deal. That's the reason he lives there. And what he was able to do is to dig out the data, not from the Chinese government. There's some that's from the Chinese government, which any government has to be taken with a grain of salt. But he was able to get the global agencies that track raw materials movement. Mm-hmm. And that information shows that not only is China importing the silver doré bars, which is the unrefined silver coming from the mines, but they were also importing, and this is tons of these bars, but they were also importing the silver concentrates or the silver ore directly and milling it down from the actual ore into silver. And they imported some, it was just ridiculous, the volume that they had done. In the last year that we were able to get, full year, was 2014, because it was last year when we got it. But he took what he was able to retrieve for 2015 and extrapolate that out, and it was going to be roughly about the same for 2015 as it was for 2014. So so China is making this huge impact on the mining industry because they're removing all the silver directly from the mines. Not just, they're basically getting it out of the ground and sent to them. Mm-hmm. And then you have, like you pointed out, electronics companies contacting not only First Majestic, but another silver mine has been contacted as well. So buy a silver mine. All of these things, yes, we do have a bullish bias. I agree with that 100%. However, when you start adding these data points together, and personally, Louis, what I think is what's happening is that these electronic manufacturers that are contacting mines are just like China. They're following China's lead, saying, well, something's going on here. I should secure my future, the future of my company, because my company is silver dependent,
right,
with a steady stream of product that is going to ensure the health and prosperity of my company. And it may not have anything to do with anything other than that. So,
lock in a price now. I think that's a very important point, Rory. You laid it out very nicely, is that if you have a bullish bias, it makes all the sense in the world that we have tightness in the market based on what we're seeing. But it's possible, and I don't want to believe it, that it could just be that companies have decided, and there are times when this happens, a company decides that they need to integrate forward, eliminate the middleman, go directly to manufacturers, and lock in a good price. We don't know that. And I think asking the question, not just to each other, but since you have access to industry leaders, ask them that question because we want to get at the truth. Because no matter what we think, no matter what we say, us pounding the table and saying that silver is going higher and gold is going higher isn't going to make it happen.
Right.
So I don't engage in that. I try to find out why isn't it going higher? And there's simple answers like manipulation, but then there's also if you believe that manipulation will one day eventually be overcome by a supply demand dynamic. That's the camp I'm in, is that eventually physical supply, if it is greater than if physical demand is greater than physical supply, we will see a price rise. Well, then we have to really understand physical supply and demand. And just because there's an increase in the number of Canadian maple leafs, that doesn't necessarily mean that there's a supply demand imbalance. It just means the Canadian mint had a good year. We have to put it all in the context of what percentage of silver is used by the Canadian mint versus the overall demand and so on. I think, you've done a good job of laying that out as well. I just want our listeners to know that we're not here just pounding the table, that every data point we present to them means silver is going to skyrocket tomorrow or next week, or, COMEX is going to collapse. Those are the types of things that I'm trying to stay away from.
Yes, and I want to stay away from that as well, because it's the more people that I speak with, the clearer the picture becomes, and the further away from an imminent, this or an imminent that. It doesn't happen that way. I mean, Eric Dubin has done a marvelous job during the interviews that I've conducted with him in explaining that none of this stuff is going to blow up in overnight. Nothing is going to blow up overnight. It's a process, and you have to follow the breadcrumbs, if you will, to see exactly where these breadcrumbs are leading, and then base your analysis on the trail that has come before, where you're at in the trail, and then project that out to see what is potentially out there on the at the end of it, and how we're going to arrive there. And I think that's what we're doing, Lewis.
Yes.
I mean,
I don't start with the bullish bias, see a piece of data, and then immediately extrapolate why that could be possibly good for the price of silver. I have to look at it as neutral first.
Neutral,
because it's just data. It's just a point. It's just a piece of information. I have to know how did we come to that piece of information? So, for example, today I'm going to report, that the Perth Mint sales are up 199%. But you have to understand, year over year from May, we have to understand that last May there was no silver kangaroo. So
not only that, but there wasn't we weren't into June when
Correct.
The U.S. Mint shut down.
Correct. So while it is a, quote, stunning gain of 200%, that story's old because Perth Mint sales are at elevated levels already, and they actually came down in May a bit. Now, I'm not going to highlight the drop. I'm going to report on the drop, and I will leave with the headline that they're up 199%. But I'll also make the point they're up from the lower level in May, prior to the surge in demand in June, the shutdown of the U.S. Mint, and prior to the introduction of the silver kangaroo, which drove sales sharply higher in September of 2015.
And I want to ask you right there, Lewis, with the U.S. Mint being on ration sales, and the Royal Canadian Mint not even being able to offer the 10-ounce bar, the Royal Canadian Mint 10-ounce bar, which is a very, very popular, I just found out, an extremely popular bar.
What's the only one from a sovereign mint? I mean, it's a good bar, and it's real.
The real deal.
Yeah.
So with those two pieces of data, is that not driving some of these sales of the kangaroo as well? Wouldn't that be helping the sale of that coin right along?
Well, it's hopping right along, the kangaroo, sure. I mean, it's done 1 million a month, 1 million ounces a month since the introduction in September. In May, it was 974,000, so it was close to. I mean, the Perth Mint has not historically been a big silver shop. It's been a gold shop. It basically has been churning out about as much gold sales as the U.S. Mint, but its silver sales have been far below. They were doing 300,000 a month up until the introduction of the silver kangaroo, and now they've been averaging about 1 million a month. And remember, May is historically probably the worst month because it's the middle of the year when people generally aren't buying. Last year was an anomaly when all of a sudden we had the surge in the middle of the summer.
Well, it's because the U.S. Mint and the Royal Canadian Mint were sold out.
But they didn't expect to be sold out because they were expecting the summer doldrums. That's what I'm saying. It was quite shocking that there was this big surge in last summer, and that had a lot to do with Brexit and a lot of the uncertainties. But it did catch a lot of bullion dealers by surprise, as it did the mints. And the thing is, Roy, which is very interesting, is that we're now at elevated levels. So you always talk about the ration. We're at 1 million a month, 1 million a week ration, when in 97, 98, and 99, they only sold 3 million a year. So we're now at this elevated level. I read somewhere where there wasn't a surge in demand. That surge already happened, last summer and last fall, and now we just remain at that elevated level where they're actually rationing at surge levels. I mean, they're keeping them there because you're getting more than 4 million a month in sales of American Silver Eagles every month since January.
Now, if they remain at that level, 4 million a month, we'll say 4.2 million a month. Mm-hmm. That's going to put them close to 52. I mean, the doc was saying his projections are 53 to 56 million for the year.
If they just keep up at this level of 1 million a week, which is a phenomenal amount. And, it's also a phenomenal amount for the Perth Mint to do 1 million a month when they used to do a couple 100,000. So now that they're leveling off at these levels isn't really a sign that growth has stopped. It's kind of become permanent, where the mints used to sell a couple of million, 2, 3, 4, 5 million ounces a year, and now they're selling 40 and 50 million a year. And it's eating into that pie, as we talk about all the time, is that coin sales were not a major issue in dividing up the demand pie. There was a certain amount of supply. Okay, so you throw 15, 20, 30 million ounces towards coins. But now that number is well over 100 million.
Yes, as we pointed out just a few weeks ago, it's like 134 million for 5 mints or something last year.
Yeah, we had the U.S., Perth, Austrian, Canadian, Mexican, Chinese, and we didn't even include the Royal UK Mint, which produces about 5-6 million ounces as well of those silver Britannias. And then you've got all the privately minted rounds and bars. It's significant now. It's probably 200 million plus that of the 750, 800 million ounces that are available after China takes its production off the market just for coins.
Just for coins
and bars, and people that are buying silver for investment purposes and not for putting inside electronics.
And Steve St. Angelo pointed out yesterday in an interview that I did with him that 200 million ounces annually goes to silver jewelry, which I would have never thought that type of volume was going into silver jewelry. I mean, so if you take 200 million going to jewelry, and another, we'll just say 200 million going into pure investment silver, that's half.
That's half. Well, that's where it is now.
All the global mine.
And commonly people say that silver is an industrial metal. It's 70, 75%. It used to be. It's not anymore. It's closer to 50%. And I would say at the end of this year, it may be that investment demand in jewelry and silverware will be over 50% of the overall demand. And even though industrial use is increasing, it's just not increasing at the level that the coin and bar demand is increasing.
Okay, now if we go back to where I started this whole thing with talking about China, electronics companies, mining, supplies, all of these things start to matter.
Correct.
All of those pieces, all those breadcrumbs begin to matter. because now we've got a little bit better picture. And what are this is not even what we're on the call for, but let's change gears, Lewis. We wanted to look at Russia and China and India's
Okay.
gold demand for last month, because that's another component of everything that we're talking about. And as far as investment grade and what people are doing with their actual money, not the fiat currency, they're swapping their fiat currencies for actual money, and we'll call that money gold.
Hmm.
What's going on with China, Russia, and India, and where are they at with their gold acquisitions?
Okay. So when we talk about China and Russia, I'm going to be talking about the amount of gold that each of them reports on a monthly basis that are included at their central banks as reserves. That
Okay.
doesn't include the total amount that goes into the country through imports, for example, in China, and it doesn't include the amounts that may be elsewhere in the government's hands, but not at the central bank. Okay, so let's start with China. China in April added, this is their official report. They say that the People's Bank of China has added 11 tons of gold, which is about 350,000 ounces, to its reserves in April. The May numbers will come out in about a week or so. Okay, so now China has about 1,800 tons of gold. Not bad, but they used to have about 600 tons of gold,
Right.
back in 2005. As of 2009, they had 1,000. Then they reported in June of 2015 that they were up to about 1,650. And since then, they've added up to 1,808 tons of gold. Now, they have been adding between 10 and 21 tons a month. That's just for the official amount into the People's Bank of China. And here comes the word of the day, and some suggest that they are surreptitiously putting the gold elsewhere. I don't think it's sneaky. I don't think it's anything underhanded. It's just, why does all the gold have to be at the People's Bank of China when it could also be in investment funds? Clearly, investment funds,
Yes.
maybe not in the West, have gold, but investment funds in China clearly have gold. They have uh, top mining, 450 uh, tons a year that they mine. So a communist country is going to buy back what they produce, right, to keep
Yep.
those mines running. Well, that gold doesn't add up to the amounts that they put into reserves every month. I mean, they mine 30 or 40 tons a month. They only put 10 or 20 into the bank. So they're not exporting it. So it's got to go somewhere else. So what we do know is that the People's Bank of China adds 10, 15, 20 tons a month, and they are now at 1,800, which places them now in fifth place. The US supposedly has 8,100 tons, Germany has 3,300 tons, the IMF has 2,800 tons, Italy and France have about 2,400, and here comes China with 1,800, and then the next country is Russia. The interesting thing is, Russia and China are the two countries really that are buying 60, 70, 80% of the gold as central banks. They're the number one and two by far. Even India, which has massive gold imports, does not go to the Indian central bank. They are trying to, like the United States, downplay gold. That's a separate discussion with their gold monetization scheme. But the Indian Reserve Bank, their central bank, does not add gold to its reserves. It's stuck at about 550 for years. It's Russia and China that are the central banks, not the countries,
Right.
not the people in the countries, that are adding gold at these furious rates and vaulting them into the top, 10 countries. And in a year or two, they'll have the equivalent amounts of Italy, and France. And we said this before, but Germany, Italy, France, United States, we don't see increases. Germany's just trying to get their gold back. They're not in the market
Right.
adding gold to the reserves. The United States, although it hasn't been audited, and if you believe that the gold is there, fine, they haven't added an ounce since the 50s. I mean, even before then, because Nixon closed the gold window in 1971 to stop the drain of gold.
Right.
When the drain stopped, they didn't say, okay, well, we stopped that run. Let's rebuild what we've got. They didn't. The United States doesn't add gold. So it's really Russia and China. That's the game. Okay, so now Russia, if you move over to where they are, they've been adding gold at a higher rate, at least to their central bank, and it makes sense because they're a smaller country and they need greater reserves because China already has 1.4 trillion in U.S. treasuries, and they're just a much bigger country. Russia is in a situation where their financial situation is more tenuous. I mean, they rely on just oil. They don't have the same manufacturing base as China. So they've been trying to boost the ruble and by basically turning the rubles into gold and buying their domestic production. So they've been adding at a pace far faster than China. Over the last 7, 8 months, um, China's added about 130 tons, but Russia's added about 50% more. They've added almost 200 tons. So they're adding on a level of 15 to 21. 2 months last year, they did 31 and 34 tons a month. So Russia's taken it a lot more seriously, I think, at least from the central bank perspective, to add tonnage to their central bank reserves. And they also have significant gold mining within the country.
Yes,
But again, if you look at what's reported, while China has about 450 tons a year in production, Russia's is less. They have about 280, 290, 300 a year. But again, in a record year last year, they added 208 tons. Well, where'd the other 100 tons go? Well, probably Russia does exactly the same thing as China does. It adds most to its central bank, but then it also probably has investment funds. It has other places in the country where it stores gold. It doesn't all have to be labeled, as part of central bank reserves. However, because these countries are run in an authoritative fashion, they can roll that money up, or that gold, the same thing, into the central bank if for whatever international reason they needed to. But
exactly.
but they
And
just
at whatever point they want to.
correct. If you own everything in the country because it's state ownership, well, because it's in another bank or it's in another vault doesn't mean that you don't own it. It just means that you haven't assigned it to the central bank of your country.
That's correct. You just move it from one ledger to the next, and voila,
So there you go.
your
So
your gold your gold reserves just doubled.
there you go. So the point is that Russia and China, some may say it's surreptitious, are not reporting their gold. I don't think it's anything underhanded. Why should they? That's only important for what we care about. All they care about is do they have it or not. And if they
Exactly.
have it, whether it's in the central bank or it's in another bank or it's in an investment fund, really doesn't matter. But the important thing is that Russia and China are public about their interest in adding to gold reserves when the rest of the countries don't seem to care one bit. The only thing we've seen in Western Europe, in Holland and Belgium and Germany, are repatriation requests. But we haven't seen them say, and you know what, we want to add gold to our reserve. They just want
Right.
to get back what they have. And
Yeah,
the same with the United States.
and it's only like you said, China and Russia, but you also have all of these much far smaller countries like
Yes.
Kazakhstan and
Yes.
Vietnam and Thailand. All of these guys and Vietnam, which are all of these are adding in comparison to their current stockpile, they're adding massive amounts
Yes.
of gold to their current holdings. I mean, they're as I believe on this show we pointed out, Kazakhstan over uh, 5 years tripled their amount of gold. They went from about 65, 70 tons to over 200 tons
Mhm.
in 5 years. That is a huge jump. And I
And it
mean,
shows it's important to them.
it shows it's important. And the really important part about Kazakhstan, there's two really important parts as far as the breadcrumbs in particular. They had their meeting with the Shanghai Gold Exchange specifically to discuss gold along the new One Belt One Road. Okay, and they are aligned pretty closely with Russia. So I mean, this is two really these are two big breadcrumbs that say, hey, this is a path worth following. At least to me, anyway.
Oh, I agree. And the thing about gold, though, is now India. We haven't touched on them. Their imports are down significantly all year, and that's a function not because Indians don't want gold anymore. It's a function of they slapped heavy import duties on gold, and they added a sales tax, but they just recently rolled back some of it last week or earlier this week on gold, curbing at least official demand. So, and then of course we have the Indian gold monetization scheme where the government is trying to give people the opportunity to turn their gold in. So India is trying whatever they can to stop the Indian people's appetite for gold, but so far it hasn't working because we're not getting good import numbers. Imports are significantly down because what happens? Smuggling goes up. So
Yep.
it's not like they've stopped the flow of gold or the desire for people to have it. And of course, Indians pay a decent premium on gold in their country just because of all of the taxes and the black market and so on. So it's hard to get a handle on Indian gold imports actually because no one has the smuggling numbers. You can get a good number on their silver numbers because they do report those and they don't treat silver. Governments don't have the same visceral reaction to silver as they do to gold. I mean, gold is the one, if you look at the media stories, that the gold is the enemy of the fiat currencies. They kind of hope silver flies under the radar and they leave silver alone. Most of the bashing, there isn't a silver monetization scheme in India. You don't see, they don't have the pejorative term silver bugs really in mainstream media. People call each other silver bugs, but it's not the same kind of, doesn't conjure up the same negative person wearing a tin hat and living in a bunker, which is what they try to make people who like gold out to be. So there you have it. You've got good, solid numbers, but again, that doesn't give you the full picture of gold demand. Other than it tells you, as you point out, that gold is flowing east to west, west to east, and that it was another interesting. I think I have a chart on it somewhere that shows, back in the 40s, 50s, and 60s, 90% of the gold was in the West. And now, officially, if you look at the just what the central banks have, you're well over a third of what's in Asia now. And that just reflects the increasing economic power. What do they do with the money? Well, they buy treasuries, we know that, but then they also add gold to the reserves. And that's
Exactly.
just safe, diversification of reserves because yes, the dollar is a reserve currency and they have trade with the United States and they receive dollars and they turn them into treasuries and they're liquid and so on. But it's not prudent to have all your reserves just in US dollars.
Nope. And if you project out what Russia and China are currently doing, you know, just a short 5 years, you're going to be looking at both of those countries adding anywhere from 1,200 to 2,500 tons of gold, and that will put them up in second, third position
Yeah,
on the
well,
on the gold chart.
the advantage of gold is, I mean, we know the advantages of dollars. People use them basically because they have to. But if there ever comes a point where you don't have to use dollars, there doesn't have to be a dollar collapse. As Greenspan has said, people will always take gold
Exactly.
because they want it, not because they have to. And that's the big difference. The US dollar is based on a fiat principle that you have to take dollars. There's petrodollar agreements. You have to price your oil in dollars. You have to accept dollars for oil. The United States requires you. It's not because people want to. Well, they want to because they have to. They don't realize underneath that is they don't really want the dollars. They have to have the dollars.
Exactly.
And if that ever changes, that just doesn't have to be a massive dollar collapse, end of the world situation. Whereas if people were willing to accept something else, and the United States can't not make them take dollars, then what else are they going to take? All the other currencies are fiat, so it's not like, well, we'll take euros. That's no big deal. People always take gold, and that's why it's prudent for countries to have it. Now, Canada makes no sense, Rory. They're down to about 67 ounces.
Yeah, they
Someone,
have they
someone,
have no gold.
someone tweeted that Mike Tyson has more gold in his mouth than Canada. You know,
Oh, that's sad. Oh my goodness. Well, Lewis, that's probably a good place for us to leave it until next time, and we'll follow up in a couple of weeks, and we'll bring the all the coins into view as far as the all the big mints, the U.S. Mint, the Canadian Mint, and the Perth Mint. We'll look at their actual drill into their numbers and see what's going on there.
Sounds good.
So I guess we've been speaking with Louis Cammarosano, and you can find all of Lewis's analysis over at smallgold.com.
That's
Louis,
spelled SMAULGLD.
well, Louis, I certainly appreciate all the time and all the wisdom, and we'll pick it up in a couple of weeks.
Thanks, Roy.
Thank you.